Hello, my name is Fan Yang, your technical analyst here at CMS Forex. It is Monday, November 23rd, 2009, and you're watching today's video technical update. To start the week, I'm going to follow up with some pairs we discussed last Friday, such as the Euro dollar, Pound dollar, and the Aussie dollar. We'll also take a look at some developments in the Euro Pound pair. This video is being prepared at about 5:40 p.m. Eastern, after the close of the US session and ahead of the Asian session. Starting with the Euro dollar pair in the 4-hour time frame, we see that the market supported the pair at 1.48 last Friday, and to start this week the pair rallied and is now stalling that rally at 1.50. We would like to see a bearish candle before considering the bearish case, but if we do, that candle is most likely going to reduce your reward to risk ratio to unfavorable. At the moment, if we take a look at the 1-hour time frame, if we have a trigger here, which is breaking below the short-term support, and also we broke this earlier today. So this could be a trigger, and if we do consider this a trigger, this would be a 1.6 to 1 reward to risk ratio based on 2.5 ATRs above this power line, and this 1.48 as the target. Alright, we'll continue to monitor this pair as if it breaks 1.5 or if it goes under 1.48. But for the moment, the short-term projection is to reach 1.48 in the Asian and European session. Now we use the 1-hour time frame instead of the 4-hour time frame because we saw that the market has oscillated within this range fairly with a short period. Usually takes about one to up at most two sessions. But now we're going to look at the pound dollar pair, where we saw it's also staying within range, but it's in a range with a wider period and also a wider range. Next, the pound dollar pair also rallied after the market cleared out the previous support here about 1.65. The market has rallied but stalled at 1.66, failing to reach the 1.6850 resistance. However, as we mentioned before, this pair's range is wider than the euro dollar, and it may take longer to reach resistance. The market appears to be in correction now, so we'll stalk this correction and look for short-term bullish case at the completion of a correction. Looking at the hour now, hour time frame. So right now we have this correction going on, and at the completion, if it's at 1.65, 1.6510, or this area where it's 61.8% retracement, we will look for bottoming action, and if there's a trigger, then we would expect this market to continue to reach 1.6850. Now we could use the 1-hour time frame here. However, if at this point, if we are looking to short or looking for a bearish case, we would use the 4-hour time frame when we anticipate action throughout the whole range. Here we have completed our first leg, and if there's a second leg, we could use this 1-hour time frame. Now the target is 1.6850, which yields 2 to 1 reward to risk ratio using 2.5 ATR. However, if we look at the first viable target, which is the previous power line here, which is 1.6750, this reward to risk ratio is 1.6 to 1. And that's it for the pound dollar. Next, the Aussie dollar pair. It also rallied as we anticipated and stalled at 0.9250 area, also as we anticipated. Next, we're looking for a decline to the 0.89 area, which would complete the ABCD pattern. This is a swing projection. This swing would be the same as this, same length as this swing. So the market is consolidating, considering that our target shouldn't be more than 0.94 area, which is the previous high. And if the market manages to continue rallying instead of having another downswing, if the market continues to rally and reaches 0.94, We can consider the bearish case here. However, this would be going against the established long-term trend. Okay, therefore, we'll keep stalking this pair to see if it can complete this ABCD pattern and look for bottoming action at 0.89. And if there is a trigger that for a rally, then we look for this to complete, or actually to retest the previous resistance at 0.94. That's it for the Aussie dollar. Finally, we have the euro pound pair. We had a bearish signal last week here, breaking below the support area at 0.89. However, this appeared at the moment to be just a clear out action. Also, we had oversold conditions, and it was a good timing to consider the bearish case. And we had this retracement back up to 0.90, and this is the 78.6% retracement area. Now from here, we anticipate another swing down, which if we project from this swing, it would be to the 0.88 area. Considering using the 2.5 ATR method, our stop loss level will be here at 0.90, a little bit above 0.9050, and our projection is 0.88. So the approximate reward to risk ratio in this case is 1.45 to 1. We have to also consider the possibility that the pair will continue to rise, and if it does, if it breaks 0.9060, then we have to invalidate this case. And there you have it. The euro dollar, pound dollar are still in ranges unless the Asian and European sessions break out. The Aussie dollar may be developing ranging action, which is stalling its long-term rally. And finally, the euro pound is bearish, especially if the current resistance holds in the Asian European session. Once again, my name is Fan Yang, your technical analyst. Remember to check out FX Times regularly for your latest news, analysis, as well as educational live events. Good trading to you, and goodbye.